Okay, we just got word Jerome Powell announced that the Feds have decided to hold the Fed funding rate steady at 4.25, 4.5. But why is this even important to you? Well, there's a couple key factors why the Fed holding the rate would be important. But before I get into that, I want to talk to you a little bit about what they're forecasting for the year and what we were thinking even as at the end of last year, what the Fed rate cuts were going to look like. So initially, by the end of 2024, we had anticipated up to 5 to 6 Fed rate cuts, where it was revised or recently to only doing 2 rate cuts that could start as recent as May or June of this year. Now, you're asking, why does this even matter to you? Well, there's a couple key things that you need to consider. One would be that the cost of everyday life for you would improve as the Fed lowers their funds rate. Things like interest on credit cards, auto loans. It's not a direct correlation to our 30-year fixed mortgage, but there is some impact. It definitely directly impacts home equity lines of credits and things like that. So your overall expense goes down, making things more affordable. The other thing that you want to think about would be your savings, your money market accounts, savings accounts, CDs, things of that nature. We've enjoyed a higher return on that kind of money as of late when we raised the Fed rate. But now as that starts to come down, the return on those monies will also go down. But inversely, your money, when money flows more freely into the stock market, you can see bigger returns because what's in essence is happening is businesses can borrow money cheaper. And when they can borrow money cheaper, they can buy more equipment, they can hire more personnel, things like that. So their businesses can grow and expand. So it's good for the overall growth of the stock market as well as the overall economy. If you are someone that's considering buying a home, I definitely would not be waiting to watch and see what the Fed's doing to make my decision. Take a look at your unique situation and decide on whether it makes sense to buy or not based on your needs, not on what the Fed is announcing. I will tell you there are many people who held out hoping for rates to come down just to see home prices continue to climb. So that's something you need to be mindful of. You might sit on the sideline hoping rates come down and then just see all that savings wash away with home prices continuing to go up. And if you're not aware of this, when rates do come down at some point, there's typically that option of refinancing and lower your payments. So lock in the price now before it goes up, and then look to refinance and lower the payment later at the time when rates improve, and that option is there. So those are some of the key things that you'd want to take into consideration or think about when you hear that the Fed is raising or lowering the rates. I think we're going to get more than 2 rate cuts, but I don't know if we're going to get quite as many as 5 or 6. I think there's a lot we have to wait and see how if Trump does put in tariffs. If he does, how does that impact the overall inflation? Because if inflation, which is still elevated over that 2% right now, but if that continues to go up because of his actions, then that's going to really dictate how the Fed decides to move going forward.